Gold and silver. Man, I tell you what, the prices look a little bit janky right now, but take heart. I want us to look a little bit more into the future. As gold and silver stackers, we pride ourselves on looking into the future as we anticipate more inflation and monetary dollar devaluation. Now, I want us to focus a little bit on something that I haven't talked about in a while, and that is the money stock and the velocity of said money stock, particularly within the United States. Now, why do those two things matter, the money stock and the velocity of currency or that money stock? Well, it helps us to get a feel of domestic inflation within the United States. Now, an easy way to wrap your head around this is by using the quantity theory of money, MV equals PT. So M equals total amount of money in the economy, so that is the money stock, and V is the velocity of said money stock. So that's how many times the money stock and circulation or the money supply gets circulated within the economy. And an easy way to solve for domestic inflation is by taking that T and making it the denominator of M and V. M and V would then be the numerator. P is the gross domestic product, otherwise known as domestic inflation. And in this video, we are going to be talking about the domestic inflation within the United States. So first, we're going to look at M, and then we're going to look at V. So let's look at M right now. So as far as M is concerned, just have to wait for it to load up here. Here we go. This is 2020 going into 2021. And as you can see here, though we did have a steeper rise earlier on in 2020, as we know with the stimulus passing and the Treasury issuing bonds that the Fed then bought, we had an increase in the money stock. And then by the summertime, it slowly started to tail off its rapid increase. The rate of it decreased, but we still saw growth. Now, as you can see here, it has not abated. Even going into 2021, the money stock has still increased. Now, remember, with that equation, the M is then multiplied by the V. So V would be for us velocity of currency, and just have to wait for it to show up here. And as you can see, just going to scroll down and move this aside. So as you can see here, it's in quarters. So you have Q1 of 2020, which it was already trending down, as it's been trending down pretty much for the last 20 years or so. And then by Q2 of 2020, it severely dropped, as we know, because people weren't going out and about spending a bunch of money. That was that both demand and supply shock that we saw within the US and the world over. But then by Q3, things changed. So remember, Q1 is January, February, March, April, May, June, and then July, August, September. What happened in July and August specifically? Well, we know that gold and silver prices rose dramatically. And as we see here, the supply, the money supply during that time was circulated very heavily. So we also saw other things increase in price during that time as well. You guys may remember that we also saw a lot of products that we even shop for increase in price. And then, as you see here in Q4, towards the end of the year, it started to dip down, which makes sense given that, you know, with the winter time and also just reclosures within the economy, the velocity started to dip. Now, the reason why I bring this up is because I wouldn't be surprised if we see the velocity of currency actually increase, especially in Q2 going into Q3 of 2021, given the fact that we're starting to see the more people getting the shot, as we like to say here. I don't want to get this video throttled by YouTube. Um, and we're starting to see less cases and less hospitalizations, which is good. And hopefully economies will start to follow suit by reopening. And once that happens, this right here will then start. This is like the kindling of a flame, and this is the match being lit. And once this edges right back up, I'm telling you guys, we're gonna start seeing a higher CPI. And speaking of CPI, today we got the numbers for January, and even though in January, we had a lower consumer sentiment and so on and so forth, consumer prices still rose in January. So imagine what things will look like in the middle of the year and towards the end of the year. Now, that's on the inflation side of the gold and silver story. But what about Elon Musk? Well, Elon Musk recently was in the news for his getting into Bitcoin and others. And there is an SEC filing that Tesla put out where they mentioned, hey, we're going to get into alternative assets. And it was released recently this week that Elon got into Bitcoin, about $1.5 billion. I talked about that on a video earlier this week. But check out what the SEC filing in January also stated. It stated the following, and I quote, "As part of the policy, which was duly approved by the audit committee of our board of directors, we may invest a portion of such cash in certain alternative reserve assets, including digital assets." So we know about the 1.5 billion in Bitcoin, gold bullion, gold exchange traded funds, so something like GLD most likely, and other assets as specified in the future. So just imagine these two storms colliding around the same time. And imagine once Elon starts tweeting about something, you'll start noticing the price rise. And I was on record in stating that I believe that the past month of him tweeting about Dogecoin, about Bitcoin, and him experimenting and talking about, hey, getting signal, and that random stock getting a bid, he probably realizes, oh, hey, I can move prices. Forget the traditional market makers. Elon Musk might be a de facto market maker in and of himself via his Twitter page. Now, also, don't forget that just gonna wait for this other section to load up here, this other tweet. Elon also stated, hey, Sandstorm is a masterpiece. So this is around February 4th, 2021. Of course, he loves his late night tweets. And after February 4th, 2021, you started to see the price of Sandstorm rise as it was actually trending down a little bit after. And then you start to see the price rise. So, guys, don't be surprised if you see a tweet coming from Elon Musk in the future saying, hey, gold, it's way better than fiat. It's just like Bitcoin, da 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 da. Of course, we know that Bitcoin actually has a closer relationship with the S&P 500 than with a safe haven asset like gold. But I wouldn't be surprised if he said something similar to that along those lines because he's in Bitcoin as well. So, guys, let me know what you think about all of this as far as these two storms potentially colliding this year. A, the storm of inflation, and B, the storm of Elon Musk getting into gold via Tesla. Let me know in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you are new. It's Black Bullion for goldandsilvertoday.com.